amazing. One of the most anticipated launches from my end on Arbitrum.
Yeah,
we've
been really blown away at like how excited people are, and like it's great to have so much attention and everything prior to launch. And so we're just really trying to like get everything and make sure that everything's going to work the way it's supposed to work, and make everybody happy.
Totally. So far, it looks like you've been crushing it. Anyway, then let's get started. Cyril is recording. Thank you very much, Cyril. Let me just welcome everyone to the AMA. You know me, Simsala. For the ones who don't know me, I'm the lead dev and one of the founders of Sphere. Rundown for Sphere is we are a big community. We have built different products like Penrose, Penrose Unknown, and our latest introduction, Dyson. A lot of people know also about the upcoming products of our stablecoin, for instance, Prion. So a lot of exciting things coming. The use case for Sphere is that we have a treasury, we are building with that treasury, and all the different products that we develop goes as revenue stream towards Sphere holders. As we have seen with the campaign that we had with Chronos for the ylSPHERE holders who locked in, were earning yield in Matic. And please introduce yourselves as well, gentlemen, and then let's get started.
Yeah. Well, first of all, thanks all the community here hearing us. It's a pleasure. Thanks also Sphere for our crazy partnerships. We know that you guys are doing really good things and you are builders. It's a pleasure to work with that type of people. Really easy to work with you guys. I am Chronos. I am the CEO and founder of Chronos. A little about myself. I've been in crypto more than 4 years. I invested really in an early stage. I started as a retail investor. After that, I increased a lot my portfolio, my personal portfolio. And I started also when DeFi starts, basically with veCHR, Compound, Curve, all the blue chips DeFi projects. I was there from the beginning. Really good, doing a lot of things, staking, liquidity providing, yield farming, flash loans. I do a lot of things. I'm a crypto lover and crypto maxi in general. I left the university after focusing myself on crypto. I was studying marketing and I decided to go fully on crypto. 4 years ago, I decided that. After that, coming DeFi. Also, I started building some companies in the space. I created a DeFi protocol on Polkadot a long time ago. And after 1 year and a half being co-founder and COO, I decided to sell my shares to the protocol because I want new objective, I want new things. Also coming the NFTs. I also, after that, starting in a really early stage on NFTs is something who, when I started, attracted me a lot. Also doing a lot of DeFi. I started also as a private investor and angel investor in few DeFi protocols as well. Doing a lot of contacts. I have I'm in a lot of alpha groups with really good people in the space. I have a lot of friends. That's quickly about me. After that, when coming solidly and all that stuff, I love the new value proposition who solidly proposed to the market. I also investing in a really early stage on Solidly and the other forks, around 5 months ago, with the other partners, we decided to start with Chronos. We love Arbitrum chain. That's why we are here. We love and Maxi also in layer 2 and CK rollups. I think it's the future of Ethereum, who is my favorite coin and my favorite blockchain. That's quickly about me. We started with Chrono 5 months ago, creating a really good team with Unified, Levy, and the other founders. I think that we have a really quality team regarding developers, designers, founders, all with experience. I'm like builder. I love to build project, to build new things, and the new maturity LPs, maturity NFT LPs who we are creating is something who excites me a lot because it's an innovation. We are really excited to launch Chrono to see how it's going with that new model. That's really quickly about me.
Amazing. Thank you so much. You want to pitch in Unified?
Yeah, I mean, I've been involved with crypto. I got in 2020 during the pandemic, and I made enough that I've been able to pretty much do this full time ever since. And I'm like really like a big picture. Like I believe in the ethos of crypto, and I really believe that we're like building this like new system for the global financial layer that sort of allows everyone to participate and to operate things like in a fair, more egalitarian way for all people. Um, and so when I was approached by Chronos, I was really excited. I was like an early stage solidly investor over on Phantom, and I participated in some of the forks, and I thought that it was really strange that there hadn't been one that had taken like a dominant position on Arbitrum yet. And so once I started working with them and we came up with this maturity adjusted LP model, it's like been a real honor to be involved with something that I really feel is like the next evolution of the DEX model and is going to like introduce a really unique and beneficial mechanism that I think is going to like help move the space forward. And just on top of that, like I've been involved with like a few smaller crypto projects before, but this has been something where like the level of professionalism, like I mentioned earlier before we started, the level of community excitement and just like the level of quality that we are getting ready to release is something that I'm like extremely proud to be a part of. And yeah, it's just been like really great from start to finish, everything from the partners to our community to like what we're building, and we're really excited to be able to launch this thing soon.
Yeah, amazing. Welcome. Looking forward to seeing you launch. All right. I think I'm just going to ask a few questions just for the community, for everyone who doesn't really understand what Solidly is. Just, a quick rundown from the horse's mouth, I would say. And maybe then talk about what is unique about Chronos. I know maturity adjusted LPs are a big thing that we're going to be talking about. Please don't explain that into depth yet. I would like to have that as a, bigger conversation and why it's such an interesting take on word Solidly as like the main core conversation point. So yeah, please go ahead. Explain what Solidly is, how it competes, and why people should be excited.
So Solidly was introduced.
Yes, so Unified. I think your microphone is rough a little. We cannot hear you well.
Yeah, it's cutting. Probably the internet. Yeah, he's lagging. If you want to take it on Chronos, maybe.
Yeah.
And once he comes back, he can take over.
Well, basically, when we start talking about Solidly, I think that before we need to start about Uniswap and how it's works. Uniswap basically is a decentralized exchange. They launched the first decentralized chain into the market. And yeah, all of you probably know about Uniswap. You could do swaps, liquidity pool, and that. After that, coming SushiSwap with the innovation about the Master Chef contract. It's what's a really big innovation in the space because you could receive incentives in sushi tokens. After that, coming Curve, who also implementing something new, who was the voting power. Adding unlocking your curve token, they provide you a curve position in curve lock, and you could vote the pools and receive incentive from that. After that, coming Solidly, who basically adding a lot of new stuff. For example, the bribes. The bribes something unique. Who projects who are outside could come to your ecosystem and to your DEX, provide bribes basically for incentivize people to provide liquidity through that pair. And yeah, you could receive bribes, you could receive emissions in CHR tokens also for providing liquidity. And yeah, after that, also you could do the locking. Basically, you lock your CHR tokens and you will receive a position in veCHR, who with that tokens you could vote the gauges and the pools who you want. After that, after solidly coming Chronos with little new things and little innovations, we do that project we taking reference from Thina, Velodrome, and ylSPHERE. We taking little things from all of them, and we try to do something new, something innovative, and something who makes more sense for, in our opinion, the biggest problem into the space, who is the mercenary capital. Because when you launch a DEX in a chain, most of the DEX, there are a lot of DEXs who come in, and all are the same. People from the beginning starting grinding emissions from the protocol, and after a few weeks or few months, who the emissions down are not incentivized, and go to the next and go to the next. That's how it's worked right now. We saw that problem, who is something really big, and we want to implement something who incentivize people to keep their liquidity positions in our DEX for the long term, and obviously we need to incentivize through a new mechanism. That's how I think I can introduce the maturity adjusted LPs, with something never seen before. We are the first who will implement it. We're taking that from the ByteMasons reliquary model. Also, ByteMasons is one of our partners. We can go more in depth about that after, but I think that's a quick explanation about Solidly.
Yeah, we're coming in now. Can you hear me?
Yeah, we can hear, but your sound is kind of muffled.
Yeah, I live way out in the woods, and I have really terrible internet. So.
I see. Yeah, no worries.
So yeah, I mean, just to sort of expand on what Chronos was saying, is like really since the earliest days of DeFi, what we've seen is like this arms race of innovation that's all been designed to help provide.
Unify. We cannot hear you. We cannot hear you. Try to put
Get closer to them. I closed my I closed my eyes, put both my hands on my headset, and I was like trying to decipher everything. So when he finishes, I could explain.
It's hard. I think if you have other device as other phone or computer, maybe works better, or I don't know if your connection or something, but we cannot hear you really well. Sorry, right now. Try to change your device, please.
All right. Amazing. So just to like do a quick rundown for everyone. So essentially, Solidly adds an additional layer that is like the bribing concept for liquidity. So you, the user, we can take it as a real life reference, just so because people understand this. Where do you lock CHR, right? The protocol token inside of the locking contract of Chronos, you become eligible to vote for pools. And let's say if there's a pool with a lot of bribes, that is like a monetary incentive for you to vote for this pool. So you go and say, hey, they're paying, I don't know, $1,000, right? This week in incentives for you to vote for this pair. What happens now is you can go and vote for this pair, and you get a share of that $1,000 based on your voting prowess, right? So that was like the big. It wasn't new, but the way Solidly introduced it was quite new. On-chain bribing. For a few of you who has been around like from Solidly V1, that has been like quite a big task for Solidly type dexes. That with the internal and external bribing contract, and now the innovation resides in making all of that possible and seamless now, which is like very good. for the entire ecosystem, because you don't have to rely on third parties. Like, when you were, for example, Curve has to, not has, but, for bribes and everything, Curve uses Votium, right? Or StakeDAO's marketplace, right? Or all the different other marketplaces. Now Solidly has all of this built in-house. Right, so that is like a big innovation. Also, there's two different types of dexes integrated inside of Solidly. So you have the Uni V2, the normal pools that you can see on all the usual dexes like PancakeSwap, QuickSwap, or Uniswap V2, where you can swap normally. And now comes also a big innovation is that Curve V2's mathematics has been integrated as well. So you have stable coins or assets that are pegged one to the other. That doesn't have to be like a US dollar stable coin. Can be a euro stable coin, or let's say a liquid ETH solution with ETH, or something that has something where both pairs are more or less the same thing in like a price value. Amazing. Okay, thanks for the explanation so far, and let's get into the big innovation that I'm also excited about: the maturity, LPs, the MA NFTs. And maybe you can give a rundown on how it helps against the issues that we see a lot in DeFi, where, as you have said, mercenary liquidity. For everyone to understand real quick what mercenary liquidity is, you provide liquidity on a DEX. That's what yield farmers do. They rotate from one DEX to the other to earn yield. And of course, a lot of these different DEXs provide you emissions in forms of their own, protocol token, governance token, however you want to call it. And when too many mercenaries, that is like the users that rotate between farms, start selling the tokens for more of the underlying, at one point the token itself becomes less valuable. And how you calculate the APRs that you see on the different platforms is you see the price of the token, how much of the emissions you're receiving, divided by the TVL that you have. So when the price of the token goes down in value, that means that the APRs across the board goes down. And once the APRs goes down, people are going to be like, yeah, why should I stay here? I can go to the next farm and, enjoy higher yields there and, make more bang for my buck, right? Now, let's get started and talk about the maturity-based positions, because that is honestly a big twist. Shout out to the Byte Masons for this new innovation with a reliquary. It's hard to express, but please go ahead, explain it.
So I'm going to try this one more time. You guys hear me?
Still quite quiet, but I can understand you. So I can make a recap once you have explained it. So that's
I could take. I think that there are two big things here. One is the token part, and the other is the mercenary liquidity, and the maturity adjusted LPs for sure. I think that I could start with the token, because in my opinion, when you invest in a project, the token is like the principal thing, and is the most important one. Always you see the token charts, how it goes. If the tokenomics goes well and doing well, the founders doing well, probably the token go well in general. But if not, most of the project fail because they don't have sustainable tokenomics. That's one thing who we put in a lot of effort, because we not do any private sale, we not do any selling token, we not do nothing through that. And we raised the initial liquidity funds for bootstrapping and for the flywheel, basically from the NFT collection. Also the NFT collection have the revenue, the real yield value. We can go more in depth after that. But we raised that funds, and we will launch our token via Airdrop. Why? Because we think that is the more sustainable and incentive like a model who you can do, because we will lock that tokens in veCHR positions, that airdrop, and people could use, it's like it's something who you could use, but you could not dump the price, it's something who have value, it's something who you can earn more money apart from the NFT. It makes more sense, for the sustainability of the project. After that, I don't know if you want to comment something about this, but yeah.
No, I think it's great because even if you think about it from a different perspective, right, is that the user at the end of the day, let's say they receive the veCHR, like, our community. Thank you very much for, doing the airdrop to the community. And why it's so good. Yes, it is illiquid. That means you cannot sell it. Let's say, you cannot sell the token itself, but there's still a financial incentive for you to participate in the ecosystem, and that is the bribes and the voting rights, right? Because when you have that VE NFT, you still can if you see there's like voting rights, you can vote for a pool, earn incentives, or how also the Solidly model works is that you also receive yield or revenue in a sense from the trading volume, right? Which incentivizes a user to vote either for pairs that give you a lot of bribes, dollar wise or percentage wise, APR wise, or you vote for a pool that has a lot of volume, right? So yes, in a sense, I would say, quote unquote, force the user to participate in the ecosystem to actually generate yield for themselves without damaging the protocol's longevity, which is really cool. Yeah,
exactly, that's the principal point. Also, here is Unified. If you could take him on board.
I invited him to speak already.
Yeah.
You see the green little hand? That's my hand, actually. Like, that's my actual size of my hand. No, I'm just kidding. Go ahead, please.
Unified. Also, Satsi is here. Satsi is other co-founder. If you could take him on board.
Already invited. No worries.
Hello.
Welcome, Satsi. Welcome to the stage.
Welcome. Just doing a quick recap. We are starting introducing ourselves really quickly and starting talking about the Solidly in general space, the DEXs, how it's work, and why we are doing something really new and really innovative and really sustainable. Because right now we are entering more in depth about the token part and the maturity adjusted LPs. I explained it how we will launch our token via airdrop, locking in veCHR positions. Right now I think that we could continue with the maturity adjusted LPs. I don't know, Satsi, if you want to introducing yourself really quickly for all the audience and introduce that model, that would be nice.
Yeah. Sorry, guys. So I'm Satsi. I'm one of the co-founders of Chronos. I've been investing in crypto for more than 2 years, and I remember first investing on Solidly when it launched from Andre Cronje, and since then I've been taking a look at what other Solidly forks has been doing, and what we thought is that there was a lot of capital, mercenary capital, getting these emissions from these protocols and dumping them. So we wanted to sort this problem out, and we wanted to do something different, and that's how we got into the maturity adjusted LPs. This briefly means that liquidity providers get every epoch a boost in the rewards, and this we think that would be beneficial for protocols that bribe, because one of the main things that Solidly sorts out is getting liquidity for new protocols, because they can bribe, and then veCHR lockers vote for their pools and they get emissions. So we solve this problem of getting liquidity in an easy way. The thing is that this liquidity used to
Can
be...
you guys hear me now?
Yeah, now it's beautiful.
Oh, yes. Yeah.
It's like you're inside of my head now. It's amazing. In a good way. Yeah, great. Feels like I'm talking to a different person now. It's good. Yeah, sorry, Satsi, go ahead, please.
Yeah. So this means that liquidity is stickier, because we think that since every epoch liquidity providers get a reward, then these LPs that are also given as an MA-NFT when you stake them can be traded over the counter on an NFT marketplace. So what we believe is that every epoch, this liquidity position would be sold at a premium in a marketplace, and then for $5,000 bribe by a protocol, you will get a more efficient bribe than any other Solidity fork, because people will probably sell the MNFT representing the liquidity than and stake in the liquidity, and that means that they will get a secret liquidity for less bribing. So that's one of the problems that we are sorting out. I think if I could also talk more in depth into it, if you could add anything.
Yeah, so I'm a little behind on where the conversation is. I had to hook up like my big microphone and everything, but hopefully you guys can hear me good now. But yeah, so when Solidly started, it was basically an attempt to kind of sort out this problem that's faced by protocols. Because, you know, for the average retail user, when you go to a decentralized exchange and you swap tokens, you don't really think about the fact that like all of this liquidity has to be provided by users. And there needs to be some incentive for users to provide that liquidity. And so there have been over the years like various mechanisms that have been devised to essentially pay users to provide the liquidity that's necessary in order for these token swaps to happen. And so there's really sort of like a fight that is happening here constantly, where the users that are providing the liquidity, it's in their best interest to always seek the highest APRs. They want to get the best return on their investment. But for the protocols, you know, this presents like a difficult problem because they're essentially having to pay for this liquidity somehow. And so one of the really common ways that protocols do that is through what we call yield farming. So you provide liquidity on the DEX, you stake your LP tokens, and then you're earning these emissions over time. And this has been like a super effective model. And then it's like, you know, until very recently, and probably still is, the most ubiquitous way that protocols incentivize liquidity for their token. But the problem with this is that, you know, if you're a project that, you know, doesn't plan to be around for the long term, or that just kind of misbalances your incentives, you have to strike this perfect balance between offering APRs that are high enough to be attractive and attract this liquidity versus, you know, inflating away the value of your token down to zero. And so Solidly is this attempt, it's like the latest in a long line of attempts to sort of align incentives and to take a little bit of this pressure off these protocols. And the way that it does this is it tries to make there be like a positive incentive for all participants in the V33 ecosystem, so that the most profitable strategy that they can take is also the strategy that's the most beneficial for all other participants in the ecosystem. So in V33, as we probably already know, but I'll just run through it real quick, you have the liquidity providers who are then able to stake their LP tokens, and they earn emissions in the form of the DEX token, in the, you know, the Solidly token. And so this right away is like a clear benefit for the protocols, because what the protocols get is, instead of if I'm you know, whatever XYZ token, instead of me having to provide incentives in XYZ token, which inflates the value of my token and makes it lose its value over the long haul, now people can provide liquidity for XYZ token and they're earning solid tokens, or in this case, CHR tokens. So right there, you have a clear benefit to the protocols. So the next thing that the V33 model does really well is it creates an incentive to protect the price of the emissions token, of the CHR token. And so this was something we first saw with Curve, is that you can then lock your emissions, and doing so gives you the right to vote on the platform's gauges. And by voting on the gauges, you get to direct how the emissions go. And so what you have here is that protocols now, instead of having to incentivize the LPs directly using their own token, what they can do instead is use their protocol-owned liquidity on the DEX to earn the emissions token, lock that emissions token, and then direct incentives to their token pair. And that increases the APR on that pair, and then that attracts more liquidity. And so the reason this works out really well, and why it's, you know, incentives are aligned, is so then what you have is you have your primary earners of the emissions token have a direct incentive to then lock the token into the protocol for an extended period of time, therefore not selling it, so that they can compound their voting power and increase, you know, these APRs to their token over time. And this has been super effective on all Solidly forks, except that what we notice on Arbitrum, and we're not completely sure why, is that the lock rate for the emissions token has not been particularly high. It does really good on Phantom with Equalizer. It does really good on Velodrome on Optimism. And it does really good with Thena on Binance Smart Chain. But for some reason, so far on Arbitrum, there's been a tendency for these tokens to get dumped more than they're getting locked. And so when that happens, it creates a problem because as the emissions token value falls, it loses its value as an incentive, and these APRs start dropping across the board. And when the APRs are no longer attractive, this liquidity goes and searches for greener pastures. So what we are implementing with these maturity adjusted liquidity positions is on Chronos, and this is the first time a DEX like this has implemented this. It's the same sort of mechanism you've seen before. You know, liquidity providers provide liquidity, they receive LP tokens, but when they stake their LP tokens, we use a modified version of the Master Chef contract that was originally developed by the Byte Masons. We've made a few changes to it to kind of optimize it for our use case. And so what this does is this tracks the amount of time that your liquidity position has been staked. And the longer it's been staked, the higher the rate of the CHR emissions you're going to get. So each week, you're going to get like a little boost in your rate of emissions. And this is going to increase every week at 33% per week for 6 weeks. And then it'll max out after 6 weeks at a 2x boost. And you'll continue earning at that double boosted rate until you unstake your liquidity position. And then furthermore, like on top of this, is all of the liquidity positions on Chronos are represented as ERC 721 NFTs, which we call MA NFTs or maturity adjusted NFTs. And there's no lock requirement for this, but when you provide liquidity, you get your LP, you stake your LP, and you get this NFT is tracking the amount of boost that you're earning over time. And so if you want to realize some of your profit on this, what you can do instead of having to unstake your position is you can sell this NFT directly over the counter using an NFT marketplace without ever unstaking the position. So when you transfer ownership in that way, you maintain any boost that it's accrued up until that point. And so we think that what this is probably going to do is mean that more mature positions that are earning CHR at a higher rate, these NFTs are probably going to trade at a premium on the secondary market, which means it'll be more profitable for you to sell your liquidity position wholesale, still staked, than it will be for you to unwrap your liquidity position. And so what this does is this makes liquidity on Chronos super stationary because you can trade it over the counter in this way. You never have to unstake it. You never have to withdraw it. So this means that protocols that are incentivizing liquidity through votes and bribes are not buying liquidity for a week at a time. They're potentially buying liquidity forever. And so we think that what is going to happen is that protocols are going to be competing extremely hard because this liquidity is essentially more valuable than liquidity on other DEXs. And if they're competing really hard, that means they're going to be trying to get as much CHR as they can and lock it away, which will protect CHR's price and will over time help CHR's price increase. And by doing that, that will increase the APRs, which increases the amount of liquidity they'll be able to attract, which will then further increase the value of this token. And what this will do is it's called engaging the flywheel. All participants in the Chronos ecosystem will benefit as this thing just kind of, catches on and goes up and up and up.
Wow, not bad, not bad. Did you take a breath, or was that everything at one go? No, that was amazing. I love it when someone just starts explaining. Usually when I sit in a AMA, I have to do the explaining, which, my community is well aware, that I know at least a little bit of DeFi. But it's also very refreshing when we have people come on the stage and explain the product, with all its nuances. And I agree on a lot of points. For instance, the lock ratio. It's no secret that we have been with Dyson already on Arbitrum, and we have seen a lot of different solidly typed DEXs on Arbitrum, really suffering when it comes to the lock ratio, right? A healthy, solidly type protocol would be when, let's say, the bribes or the buy pressure outweigh the emissions, right? In any type of protocol, that would be like the best use case. But how the NFTs work, and how you said that the liquidity itself becomes more, attractive to buy it on a secondary market, is because of one thing. I don't know if that's clear to everyone, is that, time also is money, right? So the use case here is, let's say, an example, $100,000 liquidity position, right? USDC, USDT, which has been staked for 6 weeks, is earning at the highest boost possible. So now you can actually sell that $100,000 position plus a premium, and that premium is calculated based on, okay, how long would I lose, let's say, my money if I were to stake my $100,000 from week 0 to week 6 to get that 2x boost? Let's say that would be like, $10,000 that I would be losing. So technically, people that are like providing liquidity can then say, hey, I'm gonna sell that. I see, okay, the emission someone would be losing out on would be, let's say, 10,000. So I'm gonna sell my $100,000 position for $108,000, right? Which means I can sell that $100,000 for $8,000 premium, because in hindsight, the user that would buy this position off from me is saving money on that, on technically saving time, and in hindsight still giving, a quote unquote discount to the user by having the 2x boost from the very beginning. Did I explain that correctly?
Yeah, so, and like what we've seen on solidly forks on Arbitrum is that they're very effective at attracting liquidity to the DEX in general. But then what's happening is that each epoch, when the epoch rolls over and there's a new round of bribes and there's a new round of APRs, that liquidity providers, the obvious decision is simply to unstake your liquidity wherever it is, and then to move it to the pool with the highest APR for that epoch, and just to do that every epoch. And so what we're doing is, by providing this positive incentive, so now the decision is like, okay, this pool that I'm not in has a slightly higher APR than what I have. But if I move to that pool, I'm going to lose the boost that I've earned up until this point. And so now you're going to have to kind of make a decision. Does it make sense to chase a high APR in the short term, or does it make sense to leave your liquidity where it is, and so you can continue earning this boost? And this really like changes the game theory quite a bit, because even when you are initially providing liquidity, you're going to want to think more about what you're supporting and how that protocol is likely to be bribing and directing incentives in the long term. Because like I said, like if you pull up stakes and move to a different pool, you're going to start back over at the unboosted rate, and you're going to have to build that up again over time.
Yeah, I agree.
And so, and again, just to reinforce like why this is so attractive to protocols is, let's say that I'm a protocol and I'm providing bribes each epoch. And let's say that it costs me $1,000, to attract X amount of liquidity for a week. Well, on Chronos, because there's this positive incentive for people to leave their liquidity stationary for longer, that means that the amount that I pay, if I pay $1,000 to attract X amount of liquidity, now I've purchased that liquidity for a much longer period of time, which means that next week I need to, pay less to maintain the same level of liquidity. And so this is going to change the game theory, not only for liquidity providers, but it's also, we think, going to change the way that protocols bribe. And we think that like a long-term bribe compounding strategy is probably going to be extremely effective on Chronos, as protocols will want to consistently be attracting this long-lasting liquidity.
Exactly. I mean, I'm not the person to show their own product, but I mean, you have been giving me so many opportunities to talk also about Dyson and how we're going to be, supporting, hopefully, the ecosystem as a whole. Is since we have been building liquid wrappers, that means a lot of that CHR, the goal is to have a lot of that locked. And with our mechanism, we plan to have, as much CHR locked as possible. As you have said already, or how you have said on Arbitrum that a lot of these tokens get dumped. For example, one of our previous, still partners, but one of the previous projects that we have launched the liquid wrapper for instance, Solid Lizard, they were sitting at a 50% lock ratio figure, and I believe this epoch they actually, had less sell pressure than they had returns and bribes. and the lock ratio went from 50% after we, joined and introduced our liquid wrapper to up to, 90%, I believe now. So we also believe to have, positive influence over the entire ecosystem, which of course also means that, ylSPHERE will be introduced and people can provide liquidity. Our model is quite unique. I would say, instead of having single site staking, you provide liquidity in both pairs, both parties, let's say CHR and ylSPHERE, within our own vault. And our vault has this unique mechanism that actually checks on every harvest if there's, if we are at peg or if we are not at peg. And if we are at peg, it mints, aka locks even more CHR inside of our, staker, or it buys ylSPHERE on the open market to bring the peg closer, to parity. And of course, the positive impact of that is, of course, you will earn yield based on that. And like you said, locking CHR is going to become very, very lucrative, or, incentivized, I would rather say, for protocols and, liquidity bribers as a whole, which will position us as Dyson in a very good position, because then our entire model works on locking CHR, which means we will be able to direct a lot of that bribe flow based on, the incentives that other bribers provide to the platform, right? And of course, this means that, protocols or, projects can, approach us, as Dyson, which we have seen previously happen, or, like bribers in general can come and say, hey, can you vote for this pair? We're going to be bribing this and that amount, which means we can help the protocol as a whole have a lot of variety, a lot of flavor, I would say, to the entire ecosystem. Plus, ylSPHERE liquidity providers will also be earning from these bribes that get directed back to them, which means you can technically provide liquidity yourself and, let's say farm the master chef / gauge yourself, or you can, provide liquidity with us, support the peg, bring more and more tokens, to be locked inside of the ecosystem, and additionally earn, revenue in terms of from the bribes, on top of, let's say the emissions that we also direct to our own, pool. So yeah, I think that's a lot of,
I mean, that's
yeah, sorry, please go ahead.
Oh, I was just going to say, you guys were one of the earliest partners, and I was really glad to have you, because these sort of like liquid wrappers for the veCHR are really perfect for solidly forks, because really you want to have like as little CHR liquidity on the market as possible. These things work the best when the majority of the emissions are getting locked up. And so to have you guys on board as a partner, where literally your entire strategy just involves locking as much CHR as possible, is really beneficial for everyone involved.
Thank you. Pleasure to be there. Yeah, we have already seen a sheer amount of copycats that have been copying our solution, which means it works, right? Like, I have seen so many liquid wrappers pop up after Dyson, even people coming and, saying thanks for the code in a sneaky way. It's great, like having that positive fingerprint and, in the space. And I'm looking forward to having, our liquid wrapper also, amplify CHR locking rates higher. Like I said, previous metrics from other solidly type projects, we have seen that, we are holding like 10% or closely to 10% of all tokens locked, because it's, on one side lucrative to the user, because they earn more and more CHR that they can use to, for example, lock themselves, yield, earn yield, or like just farm more and more CHR. Also earn bribes, because how the entire model works is that, every ylSPHERE has more than one veCHR backing it, right? So that means you would, over time, you will be earning, as if you were holding 1.1 veCHR, 1.2 veCHR, which then, in theory, should actually incentivize users to provide more liquidity, which would mean locking even more, right? So, it's going to be amazing. Also, that we have a vault, that means, over a period of time, let's say we establish quite a significant TVL, right? That means even if new users come and provide liquidity, our maturity time period, right? Like, because as I've understood it, is that when you, let's say, have a $10,000 position, right? That is like at the maximum boost. If you start to have another position, then that position goes, it's going to be like the half, or, like the percentage wise where the boost goes down. And once you have like a bigger and bigger position, that means we will be in, at a point where, users can come and still enjoy like the 2x boost that they wouldn't be able to receive elsewhere, right? So, yeah, a lot of cool synergies. Like a lot of cool synergies. I really like the premium solution because now people can have like a future yield paid model, right? Like that's also like an entirely new different rabbit hole where users are actually speculating on future yield, right? It's like an entire $1 trillion marketplace.
And I would say like if there's one area where we're like a little bit light at launch, it's that there aren't going to be a lot of secondary services that are designed specifically to work with these MA NFTs.
Yeah.
But we think that if we're successful, that there's like a clear incentive for other protocols to start building
100%.
extra functionality for these.
100%.
And so like something that we thought might be really interesting was, if you had a protocol that would accept these MA NFTs as collateral for a loan,
yeah,
what you could build with this would be like a self-repaying loan, because the collateral would be earning CHR emissions each week.
Yeah.
And this could be used to automatically pay off your loan for you and release your collateral. So we think that in the long term, there's like the potential that this is like a new DeFi primitive. And we're super excited to be like introducing this to the market.
Totally. Yeah. You actually open a worm scan here, because every time someone talks about a loan or collateral, they ask about our own stablecoin that we're building, which is a good intro. Get people to think about this stuff. But yeah, I totally agree. Obviously, also, like I said, you can have let's say the 2x boost assets as collateral in different to mint a stablecoin or something, where you can have like prime, it could be a prime collateral assets, right? Like instead of having a 1 week MA NFTs, you could have a let's say 6 weeks one, where the protocol itself earns the yield, right? Where it's incentivized to get your collateral inside of the protocol, which also in return could incentivize like stuff like looping and other metrics based on the maturity date of the NFT, and or people coming protocols like Pendo, right, where they split the underlying asset and the yield, right, and then people can actually speculate on the yield and buy the yield for a maturity date in the future, saying, hey, it will be unlocking in this period, and if you buy it now, you'll be earning it. I mean, I could start speaking a lot of things about these kind of ideas, but yeah, I totally agree. Very, very interesting. Very, I'm very excited. I have seen it on Optimism, a different protocol using maturity-based NFTs. So I'm very excited to see it on, solidly based protocols, because I think that is going to be very interesting and for sure a new primitive, VE33, instead of having gauges to have, maturity-based.
And in the short term, our focus is really just on we sort of set out to when we started building this, we were looking at what problems are V33 DEXs trying to solve, what has worked well with other ones and what hasn't. And so we sort of took almost like a protocol first mindset. We were like, okay, what do these protocols need? And so like I keep saying, I think that by offering them a liquidity solution, if you could buy something, if you could buy something for $1,000 that you needed and it would last for 1 week, or you could buy the same thing for $1,000 and it would last for 1 year, then it's very clear which one you should buy.
The 1 week.
And so
just kidding.
What we're really offering, our product is really a better liquidity solution than what's on the market. I mean, assuming this all works. And so if I'm a protocol that's looking to get the most economic liquidity possible, it's really, and again, it remains to be seen, but it at some point is almost like a no-brainer that it makes more sense to host liquidity on Chronos than on other DEXs.
It's renting liquidity for a long period of time, essentially, for the same amount of money, I would say, for protocols, because at one point, the liquidity stays and matures. And I think it's very good. All right, first question. I guess we should switch over to questions. We have been very technical, so probably one or the other question mark inside of people's heads that I would like to get answered. So the first question from DeFi Panda is, I hear that Chronos is possibly looking to build its own marketplace. Is that a short-term goal on the roadmap?
Could you repeat?
Yeah, of course. Yeah. So DeFi Panda is asking, I heard that Chronos is possibly looking to build its own marketplace. Is that a short-term goal on the roadmap?
Uh-oh. Now I'm
Too
the
shy.
only one that has.
It's
So I don't know if we ran into an issue. So we did all of our initial fundraising. We sold the Lost Keys of Chronos NFTs to raise the funds that we needed to like bootstrap the decks, similar to what Thana did with the Thenian NFTs.
Yeah.
And unfortunately, like we had a super successful launch. It was great. It sold out in like 12 hours. And then like 12 hours after that, OpenSea delisted us. And so obviously this was like not something that made us super happy. And so we ran around. You can trade these NFTs on Zonic and also on Wenmoon and on Tofu NFT. But we realized like because NFTs are such a crucial part of everything we're doing, because we're gonna have three. We're gonna have the CHR NFTs, we're gonna have the V NFTs, and we're gonna have the MA NFTs. That we really couldn't like risk having this be a problem again going forward. So we're building our own in-house NFT financial NFT marketplace that will facilitate easily the trade of all these NFTs. Because what we saw like with Equalizer on Phantom, part of the reason we feel that Equalizer has been so successful is that PaintSwap built like a really excellent marketplace right into their UI that made trading these NFTs like very
crazy.
And so we just think for us to avoid any other headaches that we're just going to make our own, and we're hoping to have that, if not right at launch, like very soon afterwards.
Got it. Yeah, if you have seen, I don't know if everyone here is familiar with Equalizer, but you can actually see that, Equalizer has its V equal as well. It's a solidly typed protocol. I don't like saying forks because I feel like, there's also so much innovation happening since its initial, inception of Solidly. And everyone has its own spin. That's why I always say Solidly-like type-esque protocols. You can actually go towards, PaintSwap, and you can buy, I believe, the VE NFT at an 80% floor. So that means if $1,000 is locked inside of that NFT, you can technically buy it for $800. If I'm not mistaken, which speaks volumes for the value of said NFT position. So very interesting concept for sure. And having an in-house NFT marketplace would be amazing, because then protocols users can buy and sell at any given time, everything in-house. Yeah, thanks for that answer. Let me head to the next question. Is from Pandu, is regarding the MA NFTs. Do you already have in mind on which marketplace you're going to list them? Also, how are you going to differentiate between a MA NFT that contains, let's say, wrapped ETH USDC and CHR wrapped ETH? You'll make a collection for each kind of LP. And last part, how can you see at first glance the TVL in the MA NFT? A lot of questions. Let's split them up into smaller ones. Okay. Yeah, please go ahead.
So hopefully we're gonna have the in-house marketplace ready by the time. Oh, go ahead, Satsu.
Yeah. So as for the MA NFTs and representing them, we are building an interface. The image we will be doing an image that we've already done it. It's like a clock, and it depends where the clock ticks, depending on the epoch and the maturity level. But the thing is, in our NFT marketplace, we want to build an interface easy to understand everything that you said, TVL, maturity level, USDC, or whatever it represents, whatever LP it represents. So we would have filters, and you could filter so that you can search whatever LP you want to, and then if you click on them, you could see all the statistics that you would need to know. So that's how we're going to build it. That's for now.
Interesting. So yeah, a lot of filtering, and you can decide and see everything in house. Amazing.
We can hear you, but very low, Chronos.
The next question would be, what TVL would you be happy with after 6 months of going live? I'm just asking that question. I feel like questions about price, TVL, stuff like that is always something that I don't really speak out publicly. I think if you don't really want to answer that question, that's fine. But if you would like to have like some ballpark numbers, you can also say them.
Can you hear me now, guys?
Yes.
Yes.
Nice. Yes, something really quickly to add. The timeline probably will be in around the first epoch. In epoch 0, we will probably not have in the full marketplace, but around epoch 1, we will release the entire marketplace with CHR NFT trading, maturity adjusted LPs trading, and veCHR trading. We will have 3 different positions who you guys could buy. I don't know what you what you asking right now. Sorry.
No worries. So Pax Roman, I was asking, what TVL would you be happy with after 6 months of going live?
In general, you mean in the decks?
All of it.
Yeah.
Yeah, I don't know. It depends. We will try to do our best for sure. One of our objective is around reaching 200 million TVL. That's our milestone, and we will be happy with that amount because with that, probably all the people will benefit from the NFTs, from locking and having veCHR position, more bribes, more fees. The entire ecosystem will benefit from that. We will know that is something really important to do a good launch, to having a smooth interface, and to having all in place and align all the incentives who we have and all the solutions who we provide. We know that is something who we need to do really, really well. But I think that for sure we will achieve that milestone, and we will reach as much possible, to benefit also our community, who is our principal objective, our investors, and the DAO basically is the Chronos DAO is the most important for us.
Amazing. Very, very good question. Very, very good answer. All right. Next question would be, looking at how a lot of people play LPs and any new launching DEX is to then sell their governance token, do you think the solutions should put in the solutions you put in place will stop selling their reward tokens and crash the price as consequence? I mean, I would like to answer a little bit on that. I mean, the ideas of maturity-based NFTs is actually supporting the protocol as a whole, because if you look at it, Mowgli94 is that, you are not going to be earning as many emissions as in the beginning as you may think. It comes as time passes on. So the yield should be lucrative or incentivized for long-term liquidity providers. So I mean, from my perspective, right, I'm not a part of the team, but from why I see this is that there's a lot of incentive to actually, partake in the ecosystem, right? Because obviously the new innovation is, the more time passes on, the more interesting the position becomes, and that adds an entirely new rabbit hole to the governance token itself. But I mean, please, gentlemen, you go ahead, take the question.
Yeah. I mean, there are going to be sellers no matter what. There are going to be people that will farm and sell CHR, but our position has been, if we're successful in making like the most economical, like most stable liquidity solution for protocols and for our protocol partners, then what we're going to see is a high lock rate, because protocols are going to be competing to like own and lock as much CHR as they possibly can. And so, well, an inflationary token, is likely to have some sell pressure no matter what. Our focus is really on like providing the best product possible, that product being our liquidity, and then kind of letting the market determine how it wants to price that value, over the long run. But if this all works, and if protocols want this liquidity more than they want liquidity somewhere else, then what we're going to see is that those protocols are going to compete to gain that liquidity through like a supercharged bribe market, through them providing their own protocol, own liquidity, and locking the token to increase their vote power that way. And so, all of those things just really help defend the CHR price, as well as increase the incentive for farmers to lock their token. Because, if you can farm and dump the token, I mean, by all means, but if you can farm the token and then stake it for veCHR to earn 150% APR on the bribes, well, then you're going to be a lot less likely to dump the token. And so our focus is not, price is really critical for the flywheel to work as intended. But at the end of the day, the market is going to determine that. We feel like we need to provide like the best liquidity solution, thereby providing the best product, and that the incentives to lock rather than dump will present themselves naturally.
I agree. Very, very nice answer. Appreciate that response. Amazing. Very nice. I have seen, I think, all questions being answered. It was very in-depth, very interesting to hear about the maturity boost and how that is going to be a very key element, and how you guys are going to attempt and position yourself as becoming the primary solidly type DEX on Arbitrum, maybe the DEX on Arbitrum. I mean, that is always the goal, right? Like, you always aim for the top, right? So looking forward to seeing you guys go on to your adventure, on your journey, and we're looking forward to being part of that, and working with you together to achieve fully that goal of seeing you at the very top. And if you don't have anything to add, I would thank everyone who was in here listening to the very, very insightful and interesting conversation that we had today. And I appreciate each and every one of you coming and listening to us. And thank you everyone. Thank you, the Chronos team, each and every one of you, for partaking and explaining your vision here. And I'm leaving the stage to you for some last words, and then we're gonna wrap this up.
Yeah, thanks a lot, guys. We have. I would like to drop here for all the audience who is still until the end. Something who will be really good, I think. I would like, because we will have the airdrop soon and the launch soon. We have right now an airdrop campaign in our Discord server. You guys could do some tasks. We have Rider event, Time Weaver. We have some campaigns running right now who you could earn that airdrop. And that role on Discord, who you could provide your wallet to receive that airdrop. But I would like to drop here to all the community who are here, to drop a tweet about your thoughts of Chronos, just your opinion, your thoughts in general of the project, what you think about the MA NFTs and that. The 5 or 10 we will see most good tweets who explain the things better, put more emphasis on that. We will give them whitelists, in that case Time Weaver role for the airdrop. If you guys want to participate, just for the 86 people who are here hearing us right now, we will note all your names. We will see it on Twitter if you drop some tweet or whatever who you guys doing. Basically we will take 5 to 10 winners for that. Apart from that, big thanks to you guys, to Sphere. A really good community you have. Excited what you guys are building. Excited to partner with you and integrate you in our decks. Thanks a lot. We will try to do our best to be the top protocol on Arbitrum. And yeah, to change the game, the Solidly game, through the maturity adjusted LPs, and with a good sustainable tokenomics. That's our main objectives. Yeah, big thanks.
Yeah, thank you for hosting. I'm Simsalan. Thank you.
Hey, Chronos, should they use like a specific hashtag or anything in the tweet?
Yeah, that's better. Sphere AMA or something like that, just to and we know that you guys come from that, but I already take a screenshot for all of you guys. But yeah, if you add the Sphere AMA or something like that, that will be more easier for us. But yeah, if you guys want to receive that airdrop, just giving your educational point of view of Chronos, just this to expand the solid division, to expand the maturity adjusted LPs. I think that's the objective, and the ones who do better, we will reward with that airdrop. Yeah.
Amazing. Thank you very much for giving that opportunity towards the community. Everyone who's very interested in Chronos, you have now multiple opportunities as a Spherian to partake in this, upcoming launch. First of all, you can lock Sphere, and partake in the top 200, or now, I didn't even know that. Thank you, everyone. You can write threads, and join the Discord of Chronos and participate in hopefully, winning the whitelist spot here as well. So, yeah, everyone, thank you very much for participating. Appreciate each and everyone taking their time today. And I'm looking forward to seeing you gentlemen launch. And yeah, have a good one, everyone.